Hey folks, I'm Chris Shank, and I'm your mortgage advocate. Today I'm going to prove to you how you can shave tens or even hundreds of thousands of dollars off your mortgage. As an added benefit, several of these tricks don't require you to refinance. How cool is that? Let's dive in. For the sake of these examples, here is a simple $400,000 home loan at 6.75% interest. Not counting your taxes and insurance, your monthly payment on that mortgage runs up to just shy of $2,600. Because of the interest you're paying, by the end of 30 years, the owner of this mortgage will have paid over $930,000 for that home. Now, for comparison, let's look at that same mortgage, but at 6.25%. Right off the bat, this 0.5% interest rate reduction saves the homeowner a hair over $130 per month. What's not always immediately obvious, though, is that compared to that 6.75% mortgage, this one will accrue around $45,000 less interest over 30 years. As a loan officer, these two reasons are usually why people ask me to refinance them. But wait, it gets better. Let's say that this was a refinance and that you're now saving $130 per month. Well, you're already used to spending that money on your mortgage, so what happens if you put that money directly against the principal of your new mortgage? If you do this, you'll end up paying your loan off almost 4 years earlier than anticipated. In so doing, you're saving yourself over $75,000 on that mortgage, just compared to pocketing that extra $130. These savings jump up to over $120,000 if you're taking into account the 6.75% example from earlier. Look, folks, despite what anyone may tell you, refinancing costs money. If you're lucky, your crazy loan officer uses lender incentives to cover those costs. If you're not, you're either paying your refinance with the equity in your home or cash out of your pocket. Before you think about approving a refinance, make sure your loan officer can prove mathematically that your refinance is worth the expense. Okay, now let's say that you don't want to refinance. That's fine too. I still have 2 tricks to share with you. For the sake of clarity, these tricks assume that $400,000 mortgage at 6.25%, check this out. Did you know that if you were to pay off your mortgage bi-weekly instead of monthly, you can shave 5.5 years off your mortgage and save yourself over $100,000? You don't even have to spend any extra money. Just take that full monthly amount that you'd usually send to the mortgage company on the first of the month, break it in half, and send one payment in on the 1st and another in on the 14th. Easy as that. The second trick I want to share is called the 13th payment rule. Simply put, you find out how much you're paying toward principal and interest each month. Then make sure to contribute at least that amount extra toward your principal each year. Some people lump this into one large payment at the end of December, while others break that into 12 smaller sums and pay it extra on a monthly basis. However it's done, by making that extra payment toward principal each month, you're shaving 5.5 years off your mortgage, and again, saving over $100,000 in interest for your efforts. If you want to get crazy, think of the savings that you could snag yourself if you were to combine the 13th payment rule with bi-weekly payments. Pretty cool, huh? Bottom line is this. If you want to save money on your mortgage, the only person keeping you from doing so is, well, you. That said, if you want to maximize the savings on your mortgage, it may be worth seeing if a refinance is worth it for you. Be careful, though, because any loan officer with 2 brain cells to rub together can make a refinance sound like a good idea. Be certain to make your loan officer prove to you how a refinance can work and then take it to your trusted mortgage advocate to give you a nice and healthy second opinion.